see Russia increase its gold reserves, to the largest in modern history, in Russian modern history, and China continuing to add, and all of these countries adding gold and silver. At the same time, China's treasuries are now at a 14-year low, their holdings of treasuries, of US treasuries. So this is all a last stage, late in the game type of movement where the biggest money in the world are selling treasuries, and yet we are supposed to believe that this rally that we saw in the bond market the other day, or was it short covering, I guess, it pushed rates down. Well, that's normal, huh? Whereas we're also supposed to believe that the Cayman Islands is the largest holder of our treasuries. I think the bottom line is that if you look and see all of these things happening, and the common thread is that doesn't matter what prices, doesn't matter what the COMEX is, the big money are draining the exchanges, they're draining the ETFs, the central banks are accumulating, and the public at large really hasn't caught on yet, or you would see the premiums and the availability very different than they are. So, Chris, I don't know. Buy some silver, buy some gold. I don't care if it's from me, whoever it is, but you should definitely do so, because everything that I see is pointing to this getting really ugly. And it seems to be that it's accelerating. Look at the banks. Look at what happened this weekend. 3 glitches and a bank failure. It's just beginning. Wait until these banks, just wait till the commercial real estate starts to really break the banks.
Andy Schectman, a global financial analyst and president of Miles Franklin Precious Metals, underscores Russia and China's growing gold reserves and reduced US Treasury holdings, signaling a significant shift in their financial strategy. Russia increased its gold reserves to a record 2,360 tons in September this year, RIA Novosti news agency reported on Thursday. The increase in the month amounted to 44 tons, or 2%. As a result, the current size of Russia's gold reserves became the largest in Russia's modern history. China has been quietly but consistently increasing its gold reserves while simultaneously reducing its holdings of US Treasuries, a move that has garnered attention from financial experts worldwide. Meanwhile, Andy is skeptical about Ted Butler's findings on substantial silver movements in and out of vaults. The global price of silver is constantly changing across the major markets, including the London Bullion Market Association, LBMA, COMEX in New York, TOCOM in Tokyo, and the Shanghai Gold Exchange, with smaller exchanges in Istanbul, Moscow, India, and Singapore. Furthermore, he urges people to buy silver and gold urgently, foreseeing an escalating financial crisis, including recent bank failures. Now we present the clips of Andy Schectman's insights from his recent interview with Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
The way that the games that they play, and as opaque as they are, it's even wonder. I even wonder if the information we get from the commitment of traders, how accurate it really is. I think that they are going to resort to all sorts of find the ball type of gimmicks to move from one place to another. It's hard to explain when Ted Butler talks about the massive physical movement of silver in and out of the vaults all day, every day, the turnover being much, much higher than any other commodity. So maybe they are moving it from one place to the next. I don't know, but all I can tell you is that you can see it started in 2020 when they started draining the mint, or the COMEX rather, and we saw the addition of this third group of reportables on the commitment of traders called the others. And we've seen this large accentuation in exchange for physical. We're seeing proof that it's coming out of SLV and GLD and off even the Shanghai Gold and Silver Exchange. We're seeing that they are taking things out of PSLV. I think that they are going to great lengths to hide what is being delivered, where it's being moved to, who are the shorts. They're doing things on the OTC market. They're just hiding. It reeks of desperation. It reeks of the last stages of this game, and they're all scurrying to pull as much out as they can without alerting everybody. And at the same time, you see a statement, and I know that's really not what you asked, but at the exact same time, you see Russia increase its gold reserves, to the largest in modern history, in Russian modern history. and China continuing to add, and all of these countries adding gold and silver. At the same time, China's treasuries are now at a 14-year low, their holdings of treasuries, of US treasuries. So this is all a last stage, late in the game type of movement where the biggest money in the world are selling treasuries, and yet we are supposed to believe that this rally that we saw in the bond market the other day, or was it short covering, I guess, it pushed rates down. Well, that's normal, huh? Whereas we're also supposed to believe that the Cayman Islands is the largest holder of our treasuries. I think the bottom line is that if you look and see all of these things happening, and the common thread is that doesn't matter what prices, doesn't matter what the COMEX is, the big money are draining the exchanges, they're draining the ETFs, the central banks are accumulating, and the public at large really hasn't caught on yet, or you would see the premiums and the availability very different than they are. So, Chris, I don't know. Actually, I don't know what that really means. To me, it just means more of the same, that the big money is finding any way they can to pull metal out of the hands of anyone stupid enough to let go of it. And it means the ETFs as well, PSLV no exception. I think you'll continue to see this for as long as they can, because you can't just bankrupt the COMEX and the LBMA or the game's over. So there are other places that they'll continue to pillage until they can't anymore, until the whole jig is up. And that's when you see prices go much higher. And that's kind of what I ultimately see, because it was real easy to push the price around for all these years when the focus wasn't on de-dollarization. The focus wasn't on accumulation of commodities. It was about debt instruments. It was about treasuries. It was about US equities, and the US dollar just seems to me that is being chipped away at little by little by little. And
looking at the silver market, which has struggled to keep pace with gold, the precious metal has seen the average daily volume in its options increase 48% compared to October 2022. During the interview, AndySchectman stated the increased order volume of precious metals following the war made prices more attractive. As global geopolitical tensions rise, investors become more risk-averse and seek refuge in assets like gold and silver, historically perceived as safe investments. He also highlighted bank issues as a warning and predicted a precious metals rush during bail-ins. Top global banking chiefs on Tuesday said they are concerned the financial sector's next crisis may come from rising geopolitical uncertainty, which could test financial market resiliency, while the industry remains vulnerable to regulatory tightening. While the U.S. banking sector is stable, growing vulnerabilities leave at least some institutions under a near-term threat of funding pressure and capital shortfalls, according to Federal Reserve Bank of New York staff. The convergence of multiple economic challenges and the increasing fragility of the U.S. banking system have prompted a surge in interest in precious metals in recent years, driving the gold price to new highs, surpassing the $2,000 mark in recent weeks. Let's get back to the interview.
I mean, the order volume has picked up, actually. I mean, certainly since the war started, there's been greater interest, but the premiums and the availability haven't really changed at all. It's like we've bottomed out and we've plateaued. And I'm surprised by it. I'm actually kind of shocked by it. I'm waiting for the shoe to drop. It hasn't. And if anything, we've seen, attractive prices and availability for the better part of a few months now. In an environment where I become more and more concerned, maybe I'm just more jaded than I've ever been as it pertains to what's going on in the world. And maybe I just don't understand why more people don't see things the way that I do. I think I'm cursed with seeing things sometimes a lot before they happen, a lot longer than I would like. And I'm looking out into the future based upon 30 plus years of doing this. And I see a time when the American public wakes up to virtually no alternatives as to where to safely put their money. Look, we saw another bank fail. I think it's interesting. We see three banks glitch. It was a Bank of America, a US bank, and I don't know, another one. And then at the same time, we see Citizens Bank of Iowa fail. I mean, is there a coincidence you're seeing three banks glitch? Glitch? What the hell is glitch? And then one bank fail. This is where the trouble's going to start. And, lucky for Citizens Bank of Iowa, it was bought up or gobbled up by another bank in Iowa that took it over. But that's not going to always be the case. There's going to be some bail-ins. You will not be bailed out when this is finally done. And when that bail-in happens, according to the Dodd-Frank Act, it will happen. When it does, and it catches people by storm, it astounds me every day I talk to people and ask them, do you know what a bail-in is? Understood, the least understood law that has massive significance on our future that I've ever seen. So when that happens, which I believe it will, and I believe it's intended to call the banks, to get everyone to run to the handful of the larger commercial banks. And you've been following the stuff we've been talking about, I've been talking about for years. You understand what I'm talking about. And when this happens, it's then that the public will fly into precious metals. And if only 5% allocation to people's portfolio, which would be woefully undervalued, would represent a tenfold increase in demand, according to Rick Rule and his 0.5% allocation to the US financial matrix to precious metals. And he says from Joe Sixpack to the Harvard Endowment Fund, it is under-owned to the extent representing 0.5% of the collective allocation or portfolio allocation. When that changes to 5 or 10%, the overnight impact is extraordinary. And I guess the one thing that we can all agree upon now is that there's a lot of money out there that is, wondering where to safely put it. And we've seen what's happened with treasuries and money markets. And I think you will see that moment where the realization by people who have no clue that the banks truly aren't safe. Now, if you're under $250,000, you should be okay. But there's over $7 trillion in uninsured deposits right now in the banking system. So there are a lot of people who don't get it. And if that money comes out looking for a safe place to go, where do you go? I wouldn't say the bond market in anything in terms of duration is safe these days or desirable. And the stock market, no. The real estate market, no. The dollar, shaky. Where do you go? So that's when I see things changing. But right now, no, it's been a hell of a subsidy in a world that is screaming to you, you should own precious metals because the world is upside down in so many ways, economically, spiritually, morally, the list goes on, geopolitically. So the fact that it's as cheap as it is makes no sense to me, Chris. And no, once again, it hasn't really we haven't seen anything material in regards to premiums and or availability. It's as good as it's been in years.
The rally in silver is often influenced by short-term factors related to its industrial applications, making it prone to fluctuations driven by economic conditions. Meanwhile, gold maintains its value more consistently over the long term due to its status as a store of value following various economic and geopolitical uncertainties. Given the rising uncertainties, how do you view the role of precious metals in your investment strategy? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.